Good morning, ladies and gentlemen. Eric Mashinsky, Gold Investment Letter. It is July 14th. We're in the sort of dog days of summer, but I want to make a few comments to our e-letter members that I think could be fruitful for you. And that is addressing quickly the state of affairs in gold and silver and mining stocks. We're seeing a resurgence in the platinum group metals, which I have been longing and buying for 6 to 8 weeks now. Premium and elite members are privy to this information. We've also, been busy with picking off. What I think is very important is that when you see things like the GDX or GDXJ in the last 16, 18 months, they've doubled. The price of the producers with the gold price going up, we've seen a reflection because the actual cash flow goes to their bottom line. And large institutions will buy up those indexes in the companies like the Newmonts and the Barricks. But we're starting to see, even at the bottom of the barrel with regard to junior miners, which is why I would say, if you want to make some real money, even if you're a high net worth individual that's extremely high net worth or institutional, I mix it up in our premium and elite membership in terms of the size of ideas. But some of the smaller ones, for the average Joe and or average accredited self-directed investor, are going to be massive winners from here because we haven't seen any sort of re-rating in general. Now, some deals have started to take off, but one of the things I wanted to really put in front of you guys today is the biggest pick I have in the gold area. And it still is. And it's still at a buy. And in fact, there's a new buy alert, and I'm raising the buy up to price on International Tower Hill Mines. Because what I think is going to happen, and it is happening right now, but International Tower Hill is my favorite of all of the development stage gold companies. That would include, the Seabridges, the Northern Dynasties, the Nova Golds, the Vista Golds of the world, where these deals all already have massive gold deposits. We know that. But many of them, to get developed, we had known that we needed higher gold prices when gold was in the thousands. And now that we're seeing and saw gold blow through where, like International Tower Hill, for example, which has got on their resource side, they're at like 13.6 million ounces of gold. However, I would just bring to your attention that, and 9 million-ish are in the reserve category, which is the most advanced category that you can have. So, you're talking about, and I would just bring up also that if you look at this deal from a standpoint of pre-2014-15, when the regulators changed the rule about what you could include in your resources. And so a lot of companies pared back what they were reporting, even though the gold is there. So I know that International Tower Hill going into that time was at 20 million ounces of gold. So anyway, something that's a side note, but we can operate this thing based on just, making a valuation of where it closed, on Friday, which was right at a weekly all-time high. And I started talking about this with you guys. If you took any action on this, you should be up 60, 70, 80%. I mentioned it was a buy up to $1.05 USD, and I'm raising that to 125 because you'll see in this email body that I draw a line. It's a little bit of an older chart because of the way that stock charts is laid out. I just like the way that this trend looks versus the current one, which does go back just 10 years versus like the 12. But it's the same story. You draw this very clear channel. This isn't rocket science. That's where I believe, International Tower Hill is headed as like a first stop, which is like $3 a share USD. And if you take a peek back, perhaps I'll include it in this email as well. But if you go to bigcharts.com, which has data from decades ago, International Tower Hill, THM in the US, ITH in Canada. THM is much more liquid. You have a scenario where this stock hit over $10 a share USD in 2011. Here we are, almost 15 years later, and this thing's at $1. And gold is at $3,300 versus, what was it then? It touched 1900 briefly. I mean, it's insane. So the monies, this is what I think, one of the things that I do pretty well. I'm certainly not perfect in my investing in speculative and trading career. I'm definitely not perfect, but I have had some big calls, and I also feel like I'm good and strong at basically looking during the start of a bull market when things start to run, and you have hopefully a number of those on the books. Then you want to start to look beneath the hood. What is going to go next and next? Because things go in phases, and not everything goes at once. And so I have no doubt in my mind that as gold holds above 3,000, we don't even need it to go higher. We don't, because all of these development stage companies are super undervalued. I mean, you look at 224 divided by 13, we'll call it 0.5. I mean, you can buy for $16.50 an ounce, $16.50 an ounce in the ground in Alaska. You can buy the Livengood Gold deposit if you buy THM shares here at about $1.10 USD. I mean, it's just not going to stay this way, guys. Like, I've done analysis on, and I think I own a little bit of Seabridge in an account. They have an even larger asset, but they also have like $1.5 billion or close to that market cap. THM, we're looking at a situation where when this thing goes to $3, we're still only about a $600 million market cap, and trading for around $45 an ounce in the ground. It's pretty easy for me to see that happening. Now, that's why with this particular situation, since this was 45-50 cents back in December, I took a couple of months just for elite members to accumulate a big position. I encouraged friends. If I had family with money, I would have told them to buy some too. But then premium members had sort of a carte blanche, and we accumulated up to like 65 cents US. And then I came out with it to you guys, and I've mentioned this company a number of times as a top pick. I wanted to highlight it again today because I think the days are winding down where you're going to be able to take a position in THM, under say $1.50, which would still be a buy up there. But why not get it at 110? And if you get near a triple on your money, save off a quarter or a third of that position at near 3 in the high 2s, and let the rest ride for free, because I think it actually goes back to and perhaps beyond the $10 highs in 2011. These things end up lagging a bit, and this creates the opportunity. So that said, I also want to mention, I think some people, at the gold investment letter, ironically, were disappointed in not buying, during sort of the cheap years, the frustrating years, buying more physical gold, now that it's virtually doubled in less than 18 months. And so I want to encourage my readers to not make the same mistake with silver. So silver is one of those things where, they call it in some cases like gold's wild cousin. There tends to always be correlation there, and it tends to be lagged, and it also tends to be much more extreme in terms of movement on the downside and the upside. We certainly saw it on the downside, and we're going to see it, I think, on the upside. But silver at $36-37, which is a significant breakout, by the way. The reason I'm highlighting this, the 35 level was very critical. And so two things. One is if you're a smaller investor, you can buy physical, silver coins. By the way, the state of Florida is making gold and silver legal tender starting next year. You can literally take a silver coin and go to a store and buy what you want. Just FYI. But essentially, silver, if you're looking at buying like less than $20,000 worth, a monster box is 500 ounces, which is still around, it's around 20K, but it's 42 pounds. It's a big thing to carry and to store. So, it's not necessarily feasible for those of you that are very high net worth and or institutional investors to buy a bunch of physical silver and, stock it up. You could do it through a third party where you have it stored there and pay a fee. But I would say, and this is not the ideal scenario, like with gold, you want to have physical first and foremost, but having exposure to the price. So even if you have SLV or you buy long-term call options, leaps on the silver price, I think right now you've got to be positioned. Let's hope it pulls back again, but I don't see it. I think silver's probably going right into the low 40s, and certainly that number, which is ridiculous. We saw $50 on silver in 1980. Think about that. It's like these anomalies, these mispricings are the opportunity of people that can see through this, take action. That's who makes money in the markets. This is a layup. International Tower Hill, I'm giving you a layup to make money. Silver is a layup. So be heavy in silver. Be heavy in silver because silver is going over 100. I'm sorry, but it is. I think you're going to see obviously resistance at the $50 line. But you don't want to be chasing silver because it's going to gallop much more aggressively than gold. And once it goes through 50, I think we're looking at 75, $80 first. It's not going to go through 100 in a couple of months, but it could happen next year. Call me crazy, but I'm right. I think I'm right. I think I'm right in terms of like at least a very big run to new highs. That's what I'm confident in. So I'm very, very loaded in silver. You can have also, exposure to broad silver companies, SIL, SILV, or SILJ, which is the juniors, which I own, that in size, that's at like $15.80 a share, and you could buy those on any platform. So those are some ideas for today. I also will just mention that I've talked about here in the e-letter, two stocks that are juniors that Metallis Resources, MTLFF in the US, MTS in Canada, just finished a $1.5 million financing, which our group heavily participated in, which is the money that they're going to take to drill this Greyhound property. I'm not going to get into the whole pitch today, but you're talking about an asset that's about 22 miles away from the Stibnite mine owned by Perpetua Resources. And the theme with regard to Perpetua and International Tower Hill is that Mr. John Paulson owns an enormous amount of both companies, over 30% of both companies. And Perpetua has made an enormous run from, less than the size of THM to now a 1.5 billion US market cap. They've attracted nearly $3 billion in commitments from various government entities because they have gold. It's a gold mine, but they also have stibnite, which is antimony, which is a critical mineral that is very, very necessary for war and munitions and flame retardants and things that are very important to defend our country. And it's one of several critical minerals that China stopped exporting. So we've seen the supply of this coming into the country absolutely plunge. And so we need domestic production. So you have the Pentagon and others that have been flowing money over to Perpetua. Well, guess what? International Tower Hill, it turns out, if you look into their 400, 500, 600 page, SK 1800 form, the feasibility form, that they've done that work, very deep work. they have millions of tons of antimony at way higher grades. Just they in some of the samples, if you look at their last press release about the raise they did for 3.9 million at the market, no warrants, all insider participation. Um, you know, there's four institutions: Paulson, Sprott, Electrum, Tom Kaplan, and Kopernik funds, David Eigen. These are four institutions that own over 72% of all of International Tower Hills. So that's why, like, first of all, nobody needs us to do anything with that deal. They're going to fund it until they make it rain. And that's the same thing with Perpetua. And they have the ability to do it, to go through, build a mine, and get it through all these tricky. I mean, it's in Idaho where the stibnite mine is, and it was a tricky permitting situation because there was a mine there prior that had polluted some of the ground, and so there's a big restoration program and stuff that had to be put into place there. But they're making it happen, and so with Tower Hill, buying it here to me is like it's a joke. So anyway, though, Metallis has given us enough information in their field programs at their Greyhound project 22 miles away. It's ultra high grade silver, antimony, and gold, not just gold and antimony. In fact, some of the grades we've seen with the production of silver over 100 years ago at that mine are some of the highest that I've ever seen in the world. So now they're going to do the first formal modern drill program of like 10 to 12 holes on this private property that's been owned by a particular family for over a generation. And I'm telling you right now, I think it's going to be very, very difficult to have them go in initially and like not find anything. They know where there's pockets of very high grade stuff because they find chunks of high grade sitting on the soil. They didn't even go into the adits during their field sampling program. So my thought is, you've got a situation on Metallis where, I mean, keep this in mind, guys, like on the US side, the stock 13.4 at 16 cents US, $13.4 million market cap. You think that can't go up tenfold and get bought out quickly by like Hecla or Perpetua if they have one or two, even just a couple of successful runs at exploration drilling? I think it's going to be in play a lot sooner than later. So that is one of my larger positions. Elite and premium members are very deep in this deal. You're going to have to pay up a bit if you want any sort of size, but you could go up to 27 cents or so Canadian, 15, 16 cents. I'm sorry, 20 cents or so, 19, 20 cents on the US side, MTLFF, MTS in Canada. But you want to have a position there, and they're not drilling immediately, but they will be soon, like within the next month. So you're going to have anticipation building. And I would just, say that those of you that do own some from prior mentions, hold on tight. And, those of you that don't and are looking for opportunities that are going to be unique plays. I've seen this before with discovery plays. It's called the Lassonde curve. This is something where in the early days of a discovery, as they prove that up, you could see some of the best performance of a stock in its life cycle, only trounced by years, maybe a decade later, when they actually go into production to ramp that up and have profits. So I love stuff like that. Same thing with Phenom Resources, which, believe me when I tell you, PHNMF and PHNM in Canada, this remains my largest position. And this deal's been quiet, but you're talking about, just at a $20 million market cap for Phenom with ridiculous assets. I mean, they've done some drilling. They're preparing for permitting at two sites that I think are superstar Carlin Trend mega potential discoveries, which is the King Solomon deposit and Dobbin. Dobbin is where they were finding up to 3 grams gold at surface in Nevada. So that thing, there's belief amongst even people that I've had look at it as third-party geologists that believe that that's going to be a multi-million ounce deposit. And it could be, I mean, just huge. So then you've got Crescent Valley. You still have underneath the vanadium, which Dave Matheson, who's an extremely successful, legendary Nevada gold explorer, believes there's a massive gold system there. The issue with that is I think they need to bring a partner in because it's expensive to drill those holes. And it's, you know, if and when they hit, it's going to be an elephant. So you need financial backing. But not only that, on the vanadium side, we're seeing over a 20-25% discrepancy in the vanadium price in Europe and China, Europe being much higher. Why is that? China controls all these markets with critical minerals. Vanadium's one of them. And I think what we're going to see is that dichotomy, that paradox happening where China just keeps it low because they're controlling all of it. They use it, they produce it, they use it. Why would they want to drive the price up on themselves? And then you're going to see in Europe, the European markets where it's mostly quoted for the West, it's going to continue to creep higher and then eventually explode. We've got the largest vanadium asset deposit in North America at the highest grade at Carlin, and also a very interesting couple of patents and IP for petroleum coke ash processing, which could bring vanadium production to the USA in like 2.5 years. You know, I mean, some of these things to build a mine at Carlin is going to take 5+. But I think that this is going to attract some of the eventually some of the government money, because we need vanadium and we don't have a source in the US, you know, just the same as antimony and, you know, things like tungsten and fluorspar and all these things. I mean, it's just incredible the position of vulnerability that we're in. And so we're going to see that FOMO come into stocks like this. Plus, you know, Phenom's got a 5% stake in MK Plus, which has cracked the solid state vanadium battery code in Japan. So packaging up the vanadium company, spinning that out, keeping the gold, that's still the plan. And it will unlock a lot of shareholder value. So what's going to spark it? It's just cheap. It's at the low end of its range right now. So for those of you that want to, you know, pop some seeds in the ground under 30 cents Canadian, like 22, 23 cents USD, I think it's just going to be an incredible investment from here, you know, and these things can end up starting to pop when you least expect it. But Phenom, I've been in for a while. I have a ton of stock. I actually have been buying more in the market recently because of the fact that it's at its very low end of its price range. And typically when I've done that, you know, I'm up like 40, 50, 60, 70% in a fairly short period of time on that extra stock that I buy on top of my core position. So that's it for today, guys. Cheers.